Now, as the global community continues to battle ongoing price rise, in the United States, the Federal Reserve raised the benchmark interest rate by 0.75 of a percentage point. In a bid to fight the most intense breakout of inflation in the country since 1980s, it was the second straight 75 basis point increase and the fourth rate hike this year, as the Fed looks to cool the strongest surge in inflation in 4 decades without derailing the American economy. While the Fed chair did acknowledge that the economy is slowing down, it also did warn that further hike in borrowing costs is likely going forward, adding that it will continue to raise interest rates until inflation returns to its original 2% goal.
Today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 2.25% to 2.5%. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and evolving outlook for the economy.
Now, this move will raise the key rate, which affects many consumer and business loans as well, to a range of 2.25%. That's the highest level since 2018. While the move has started to slow down the economy, Powell has made it clear that they are willing to risk a downturn in order to curb runaway prices. He acknowledged that the economy has slowed down in some areas. However, Powell has made it clear that they are willing to risk a downturn without sending the world's largest economy into a recession. Powell also said that the country is currently not in a recession, as many parts of the economy were quote-unquote performing too well.
So we're trying to do just the right amount, right? We're not trying to have a recession, and we don't think we have to. I do not think the U.S. is currently in a recession, and the reason is there are just too many areas of the economy that are performing, too well. And of course, I would point to the labor market in particular. As I mentioned, it's true that growth is slowing, and for reasons that we understand. Really, the growth was extraordinarily high last year, 5.5%. We would have expected growth to slow. There's also more slowing going on now.
Now, Wall Street rallied after the Fed's announcement, cheering on the implication that the Fed may not have to raise rates so aggressively in the coming months. While the dollar retreated, but the fact remains that the surge in inflation has eroded consumer confidence. Consumers are showing signs of cutting spending in face of price rises, and business surveys project that sales are slowing down. With the November midterm approaching, the diminished approval ratings for President Joe Biden have increased the likelihood of Democrats losing control of the House and the Senate.
I know it was easy getting into the...
Now, even as the markets cheer the move by the Federal Reserve, economic expert and assistant professor at Niagara University, Craig Tideman, said that the latest move by Chair Powell shows that the United States is ahead of other economies in the world, and the rate hike is likely to be witnessed next around the world in order to fight the ongoing price rise. Listen in.
The Federal Reserve Open Markets Committee, they voted unanimously, which was interesting, voted to raise the federal funds rate by 0.75 basis points up to like 2.25 at present. And if we think about this was kind of expected. I think a lot of the markets right now aren't really responding too much. If anything, they seem to be positive or holding steady. A lot of this information was kind of expected. If anything, maybe if they would have gone to a full basis point increase, that would have been led to a more drastic response. If I think about international markets in particular, the Federal Reserve Bank has actually been kind of ahead of other central bankers around the world in terms of raising interest rates here in the United States. And so maybe, again, we'll see patterns. I know the European Central Bank had been meeting and looking to raise rates recently, right? So you might see more of that going on around the world.
WION is now available in your country. Download the app now. Get all the news on the move.